Happy Monday. It's time for another Monday Mortgage Minute with my friend Nathan Jennison. He's the owner of the Mortgage Architects, and he is here to tell us about what's happening in the mortgage world. Nathan, you had some good news the end of last week. Things were dropping a little bit. So tell me today what's happening.
Yeah, so let's touch base on the good news first, and then we'll touch base on where we're opening on this week. Fannie Mae did an interview of over 150 of their economists, and the median results of that are that they are expecting about 2.5% appreciation nationwide in terms of real estate values this year. The bigger news is that they're expecting 14% appreciation over the next 5 years. So if you're buying a $500,000 house over the next 5 years, you'd expect to see that house go up approximately $70,000 in terms of what it is that they're projecting. So that is huge.
You're right. That is some really good news. And I think that we feel like everything's so expensive right now. So to think, okay, things are working in time and we are going to get some appreciation. So I'm glad you started with that. So
Yeah.
bring the bad news to us.
So the bad news is that everything that's going on in terms of mortgage interest rates right now is really hinging from the effects of the U.S. Iran war. There's not good news this morning. Unfortunately, they were having a lot of optimism last week that they were reaching a deal. They had negotiations going back and forth, and then over the weekend that has unfortunately broken down. And so what's happening is that we're seeing mortgage interest rates go up, and based on just that trend. And then on top of it, Exxon has issued a pretty dire warning. They are saying that they could see get oil go up to about $150 a barrel. Right now, it's in the low 90s. So that will be a massive impact in terms of gas prices. On top of that, we're starting to see the stress filter through the economy. And so we've already seen a slowdown in terms of the US GDP. It was at 1.6 for quarter one. And then the other part of this that's concerning is that like seriously delinquent credit card rates have jumped to over 10%. Same thing with student loans. And those are really significant. But the one that really worries me is that we're actually over 5% in delinquents on auto loans.
Ooh.
Now, the reason why that is concerning is one, it's the all time highest that's ever been recorded. But the other part of it is when you are delinquent on credit cards or student loans, they don't come and take anything. Like they can't come take your education that you've already got. When you are delinquent on an auto loan, they come and repossess the car. And so, in terms of the stress to the actual consumer, that is a significant red flag because it means people are not paying something that is going to ultimately be taken from them. And so, that's a pretty large warning.
And a means of transportation to be able to get to work and that kind of thing. That's really a very sobering statistic.
Yeah. So that does have us concerned. In terms of what we're seeing with mortgage rates, I will show you the screen on that. So these are mortgage bonds. They're bought and sold much the way that stocks are. And this is what lenders use to price interest rates on any given day. So this is why it matters. And to give context, green is good. Green means that rates are coming down or becoming less expensive. And then red is the opposite of that. Rates are basically becoming more expensive or going up. Essentially, what we're seeing this morning is that we are essentially seeing rates reverse course of where they were, and we have broken below some levels of support. So, what this is, pretending is that we're going to see rates continue to rise probably throughout this week, unless we have significant news that is going to reverse that course. And so, that is the main concern that we have right now.
Yeah, I think that's a pretty big concern. And hopefully, we won't get to where we were a week or so ago when things were looking close to the 7% range. It was like 6.7, something around there. That was kind of unsettling. Thank you so much, Nathan. Hopefully, next Monday, when we do our little Monday Mortgage Minute, hopefully we'll have some better news. But it's any news and any way of staying informed is important. So thank you so much for sharing this information with us today, and we'll see you next week.
Sounds good. Thanks so much. It's always a pleasure, Kenda.
Thanks.
Thank you.